Hi everyone, today I'm talking about how to buy a good stock and how do you know which is a really good stock. I'm going to use two demonstration stocks for this, and this is kind of my method. If you don't agree to it, that's totally fine. This is just my opinion, guys. Everyone has a different opinion on how to buy a good stock. But if I was to say this is how I do it and do a demonstration of it, I'm going to show you how I do it right now. I'm going to use two stocks as a demonstration in this video. Number one being L Brands and two being Facebook, and I'll talk about the reasons why I picked these stocks. So number one, L Brands. I'm going to choose L Brands as a stock that I would not invest in. The reason why I've chosen this stock is because I know a fellow YouTuber who's a really good guy at investing, but he picked this stock and he lost a lot of money on it. It went down a big chunk, and I'll show you a chart of how much it's gone down by, and how I was very confident that that was going to be a bad choice, and I'm going to show you why I thought it was a bad choice. And a stock like Facebook, which I've chosen this company because it's at a good potential buy, I think, right now, and a reasons why I'd invest into it. I could have chosen other stocks that I like Alibaba or Google, but I chose Facebook just because it's a company that I'm invested in right now, so it made a lot of sense. So, first of all, I'll say a stock that I don't like. Which stocks would I not invest in? Now, L Brands is a very good PE, and it also pays a really good dividend. Now, dividends to me, I'm not too fussed about. It's great if you have a dividend, but it's not everything. L Brands has a great PE. It has a great dividend. Now, the first thing that was wrong with L Brands for me is that it is an online retailer, but there's a lot of competition in the online retail space at the moment. It's pretty much a battle to stay afloat with online retail because there's so much competition right now. And the other side of it is that they're a high street company, and high street business at the moment is pretty much dying, which affects L Brands quite a lot. And if we look at L Brands, the growth on the company, the EPS side, the revenue side of it, it's below 10%. And for me, that's a pretty much sign of like, we don't touch that company. For me, most of the time I invest in a company where the EPS and the revenue growth is above 10%, and L Brands is really struggling. You can see pretty much over the chart that it's pretty flat, which is obviously a bad sign. You want to be invested into companies that are growing, and L Brands failed to do that. So as well as not being a leading person or company in the area that they're in a struggling side of pretty much a company right now with the area that they're in. So that put me off. Bad EPS and bad revenue, you know. It's not a company that I would touch. So a little bit of demonstration about L Brands right there. Now, how to buy a good company is the main thing, and it does take a while for you to get your own method on this. But I'm going to choose Facebook. Now, the reason why I chose Facebook is that when I invest in a company, I like to have a company that has pretty much a PE lower than 30 or a forward PE lower than 30. Facebook is by far the leading company business in its area. Twitter obviously is quite close, Snapchat, but realistically Facebook is miles bigger than them. When you go into reading a company's earnings report, its annual report, what they're saying they're going to do, you can see from Facebook side of it is that they're going to increase their advertising and put their cost up, and they'll make more revenue for putting adverts on their website. It's a very simple company. When you invest in a company and you start investing, it's good to choose a basic company like Facebook, but when you're investing for a while, you can go for more companies that you probably never heard of, but then you can pretty much figure out how the company works. And Facebook has had a bit of a turbulent year. It's had a bit of bad news articles, which can happen to every single company, to be fair. It can come out of nowhere and take everyone by surprise, and that's where you see a big massive drop. And Facebook has had that. It's had it the first time, and then it had it recently, which is where I bought in at the dip. So Facebook got a bit of bad earnings report, but when you go through the earnings report, it's just because they said that daily active users were shrinking, but that's going to happen. But as long as the revenue and EPS grow, who cares really? You know, if a shop said it had 1,000 less people come through its stores, but it earned £1 billion more pounds, which you think it's more wanting? It wants the money at the end of the day. So for Facebook, daily active users, people have to get off the back of daily active users. It's not about that. It's about how much money the company, how much company and profit is the company making. And as well as that, Facebook have a really good balance sheet compared to L brands, which is also a very important thing to be looking into when you're buying a stock. Now, the first thing, how to buy a stock, is that you want to try and get it at the right price as well, where you're happy to go in at. So pretty much Facebook was kind of sitting quite high up. I think it was after it recovered after its Analytica scandal. Then its earnings report came down, which it dipped to about. I'm gonna attempt to write upside down, which isn't easy. So that says 180, and then it's slowly creeping up. So a good time for me is to buy in there, because if we went back to the early point, which I'll show a chart of, if you bought here, you would have gone up, you would have made your money here, and you got to sell. When it dips down, that's another good opportunity to be buying into that stock. Obviously, it's one of those things, if you sell at the right time or you want to hold it longer. But a company like Facebook, it doesn't really matter too much, because at the end of the day, the stocks always go up. You know, you look at the last recession, the stocks have all recovered and gained since then. So there was a world war, and stocks went down, and they recovered from there, and they went back up. So stocks always go up, but potentially that's another video about when to buy, when to sell, which I'll probably make in a few days. But to get it at the right price, the PE, the mindset of the company, the growth that it has on the EPS, the revenue, if it's the leading company in its sector, the balance sheet, so there's no debt, a lot of spare cash to pay things. If they get a fine, for example, they could pay it off easy. All those things are really important in my opinion, and that's basically a quick summary of how I would pick a good stock if I was going to invest in it. Like I say, if yours different, that's totally fine. Everyone has a different opinion on what is a good stock, but this is mine, and I thought I'd share that out in case it's something that you thought, oh, that's a good idea, I'll check that out next time. So guys, give the video a like, and I'll probably see it on the next video.